Hi guys, so it's Stephen from Cheltenham Tax Accountants, but we've had a bit of a rebrand recently. We're actually called CTA Profit First Accountants. If you want to find out more information, visit our website. Profit First is quite a well-known system to really help maximise the cash in your business and increase your profit in a sustainable way. But that's not what I'm here to talk about today. So I want to talk about the salaries in your business if you run a limited company. If you're a director, what's the optimum what's the optimum amount to run through as a salary for 22-23? So if you're starting from April, we'll be talking about monthly amounts. If you're looking at this video later on in the year, you just need to play a bit of catch up for the previous month. So say if you're starting for June, then you just need to sort of backdate April and May. And this is assuming you have no other income sources. So this is literally assuming that your only income is through your business, which is going to be salaries and dividend. So typically we go up to the lower, we go up to the secondary NI threshold typically. So we're looking at normally this threshold here, which is £9,096. I think it's £9,098, the exact amount, but around £9,000. It was slightly lower last year because it does tend to go up a little bit each year. Normally we go up to that NI bracket because it gives you all of your you qualify for everything in terms of state benefits, so state pension, all of your entitlements, and it's as good as earning £40,000 in the government's eyes. But you don't physically pay anything across. You don't physically pay any NI or national insurance at all. And that would be quite an easy option typically, and it just goes up incrementally. But it has changed slightly with all the different rate changes and the employer's NI going up. So there's quite a few different factors to take into account nowadays. So we've got two main options for you that we would recommend. Option one, which is the easiest option, but not quite the most tax efficient. So it's definitely easier if you're running it yourself, you don't have a bookkeeper, an accountant or a payroll bureau, is if you run £758 per month, so £900,096 per annum. That would give you all of your state pension entitlements. It's still extremely tax efficient. It's going to save corporation tax of around £1,700. So it's going to reduce your corporation tax bill. And then you can take the rest of your income as a dividend. We can do a separate video for that. That's the easiest option because it means you don't physically have to pay anything. So if you're the only person on your payroll, then we would normally recommend this, particularly for doing your own salary. If you've got an accountant doing it, then take our advice or their advice. But that's the easiest option. However, the most tax efficient option, assuming you have no other income, is going to be up to the primary earnings limit for NI, which is £11,908. You might be thinking, where's that number coming from? Because the tax bracket is higher. It's over £12,000. This is the NI limit. So just to confuse us, HMRC have different NI limits, different tax limits. It's our job to sort of keep on top of everything. So if you go up to this limit, you don't physically pay any employees NI. So as an employee, as a director of your own business, you don't pay any NI. But you do pay some employers' NI. So what you'd end up paying is £422 in employers' national insurance. However, the extra salary that you've run through your business, because you're increasing it from this £9,096 to £11,908, and by the time you've added on the NI you need to pay, it's going to give you corporation tax saving of £613. So you're actually not £191 better off to run a salary of £11,908 for the year, which per month is £992.33. So say £992. So that's technically the most tax efficient option. So there's your choices. Do you want the easy option or do you want to save an extra £191? The difference is you're not going to see that saving straight away because you're going to physically have to pay your NI towards the end of the year, but you will eventually get your corporation tax saving for running that higher salary through. If you're a client of ours, we will be reaching out to give you our advice, but I just wanted to give you the options because it's a little bit more to think about this year than normal, but you can always reach out and pick our brains. Cheers.